My dividend investment portfolio. My current holdings are Realty, Shell, PepsiCo, Johnson and Johnson, Microsoft, Coca-Cola, Schwab, Agree, Verizon. Realty Income is a dividend aristocrat with a long history, has great survivability. For example, 2008, great yield, higher end of 4%, and Agree Realty. They both have, they both focus on acquiring freestanding single unit properties leased to industry leading operators under long-term net lease agreements. For example, Walmart. Cons are increase in interest rates could drop the stock. Recently, we had a 0.5% drop, and that helped the stock market a lot. On to the next, you have Shell. The pros are they're in 70 plus countries, and I think they can and will grow, have tons of growth potential, more countries, blah blah, everywhere, even more in the US. They have good financials, they're strong, but another con, transition to renewable energy will hurt fossil fuels, which is their main gist. Laws can change and mess with price and confidence in product. 3. Public image of fossil fuels can hurt the company long term because of the trends of uh, energy cars, for example. Let's say Tesla. Those cars are the new facade, or not facade, hype, because it quote unquote saves the environment. Why do I invest in this? I believe it will continue to grow because, at least for the rest of my life, we will probably be relying on fossil fuels unless we have a big jump in renewable energy. And the investments in renewable energy that the company does will benefit with the trend. So, because they are still staying up with the game instead of letting it beat them. And on to Pepsi and Coca-Cola, which are my food stocks. These two go hand in hand with my goals of future growth, with consistent dividend growth, stock growth that I think will be great in the future. Great product with great potential. You can always make more drinks. Wide market all over the world. One of the cons, though, is health trends could make these fall. For example, diets, just healthy eating in general. Currency risk from being in a lot of countries. And 3, might not be long term. If people stop consuming so much carbonated drinks, they might be on the downturn, but you can only estimate. Why I'm investing in this, with the obesity pandemic continuing and getting worse, there is a great future for these stocks, I believe. And 2, even with huge weight loss products like Ozempic, people love pop. It tastes good. Uh, and for example, bodybuilders, the 0 calorie, buying that because it just gives your taste buds something. But I think pop and sugary and carbonated drinks do have a good future. Johnson and Johnson, pros, very diverse. They're in pharmaceuticals, medical devices, consumer health products. So it's stable through diversification, strong financials. They have good cash flow, consistent dividends, dividend king, right above a dividend aristocrat, which is 25 years. It's over 50. So it shows a commitment to returning value to shareholders. Global presence, legal risks are some of their cons. When faced with significant lawsuits and regulatory scrutiny related to its products and opioid litigation, which could impact its reputation and finances. Market competition, healthcare sector is highly competitive. Dependence on pharmaceuticals. A good portion of J&J's revenue comes from pharmaceuticals, which makes it vulnerable to patent expirations and pricing pressures. Economic sensitivity. While J&J products are often considered essentials to life, economic downturns can still affect consumer spending in the consumer health segment. Microsoft. Some of the pros of Microsoft is strong growth potential, diversified business model, solid financial position. And so Microsoft has continuously demonstrated robust revenue growth and software products and other innovations, diversified business model, well-rounded, software, hardware, and gaming, reducing dependence on single revenue stream, solid financial position. They boast a strong balance sheet with significant cash reserves, which is great. Cons, valuation concerns. Sometimes they're viewed as overvalued, and that could lead to potential price corrections. Competitive landscape. Tech industry is highly competitive, so it can be hard to get the edge, but I still believe that they're going to be a big contender for the foreseeable future. Scrutiny as a major tech player, Microsoft faces scrutiny from regulators regarding antitrust issues, which could pose risks to its business practices and growth strategies. Reasons to buy, I believe it has long-term growth, reliable dividend, strong brand and market position. A lot of people use it, and I don't think it's used in school, all this, don't think it's going anywhere. Schwab, pros, strong dividend focus, low expense ratio. They have a relatively low expense ratio compared to many other funds, which could help maximize returns over time by minimizing costs. They're very diverse, as you can read here. Cons, market sensitivity, which can lead to price volatility. Sector concentration, while diversified, may have higher exposure to certain sectors like utilities and consumer staples that could be affected by sector-specific downturns. Dividend cut risks. While the ETF focuses on companies with strong dividend histories, there's always a risk that individual companies may cut or suspend their dividends due to economic conditions. Reasons to buy: income generation. They provide a high dividend paying stock, long-term growth potential. The focus on quality companies with strong fundamentals may offer potential for capital appreciation over the long term in addition to the dividend income. Tax efficiency as an ETF, it's more tax efficient compared to mutual funds. Next up is Verizon Communications. Pros: stable dividend, robust network infrastructure. As one of the largest telecommunication companies in the US, Verizon has extensive infrastructure and strong customer base, which can provide stable revenue. 5G leadership, it's the leader in 5G development, so it does have quite a lead. Cons, they are in a huge amount of debt, which can be risky. I don't plan to have this super duper duper long term. Intense competition. It is really highly competitive with aggressive pricing and promotional strategies from rivals, which can pressure margins, slow growth. So compared to other industries, the telecom sector is experiences slow growth, which may not be appealing for investors seeking rapid capital appreciation. Oops. Reasons to buy: reliable income for a while, hopefully. Growth in data services. Data consumption will always increase, just like oil consumption, gas, all this is always going to increase with more people. Defensive stock. As telecommunication services are generally seen as essential, it can be a defensive stock. Before investing, since this is a riskier stock, it is essential to evaluate my risk tolerance and my financial goals to see if I want to risk it and see how they do in the future. And so this is my totally calculated annual income. But if we pull this out here, I'm still here. My current holdings: Realty, Shell, SHID, Verizon, J&J, Microsoft, ADC, Pepsi, Coke. Dividend income for the next 12 months. It is higher because this is all glitched out, I'm pretty sure. Because looking at my portfolio, you see it's up 35%. It isn't. It just went through a stock split. So you have my main sector here, real estate at 40%, which is my biggest loss. You have realty income at 80%, agree at 20. You have energy at 25%. It's just Shell. I originally had Canadian Solar, which isn't dividend, but it was just for a short term wannabe profit. It did profit, but then I didn't sell and I lost. And I wasn't going to hold on to it because I wanted to focus on my dividend. Tech, you have Verizon, Johnson & Johnson, Microsoft. Johnson's up. You have Schwab. This is a glitch, as I mentioned before, at 10%. And last, you have food, which is Pepsi, Coke, and with a estimated dividend income of $86, which I think it's around more 75-ish, with Schwab not being all goofed up. That should be it. Thank you.